Hello friends, this is Raj Sassi from Raj Option Trading. Today is May 4th, 2022. Hope you're all doing very well. What a relief rally in Wall Street. Wall Street stocks went higher because Jay Powell, or Fed chairman, increased the rate by 50 basis points, and there is no hawkish language. That's why stocks went higher. So with that, in today's segment, we'll take a look at most beaten down profitable stocks to buy, and so that we can build our wealth. So with that, we got one company here, Idex Labs. Stock came tumbling down with the fears of decreasing margins. It's a very good company, makes pet medications, and it's a good one to buy. So we'll look at Idex Labs and many more stocks and see if we can buy them at a bargain price. Alright, so in today's segment, we'll take a look at market update, look at top stocks to build wealth, and look at stocks with sales growth more than 5%, profit margin more than 5%, free cash flow as well as cash on the balance sheet more than $100 million. And we'll do a quick deep dive on Idex Labs, and finally we'll have a quick conclusion. So with that, look from a market perspective, we had a nice uptick here. Dow Jones Industrial Average went higher by about 900 points. That's a very good uptick here. In the futures market, it's slightly down, as you can see here, down 47 points. And same story, we had a nice rally in S&P 500 as well as Nasdaq hundreds as well as Russell 2000. Overall, very good rally. Most of the stocks went higher. And we also had a good rally in gold. As you can see here, gold is up since last 3 days. Crude oil is also up, and we got a bond, trying to see where to go here. It's forming a nice base here. Interest rate came slightly down, as you can see here. So with that, let's jump in and look at the market and how the market did today. We got here market one-day action, as you can see here. Just today, Dow Jones Industrial Average went up by 932 points. That's a huge jump, 2.81%. Look, in the morning up to say 2 p.m., it did nothing. But after Fed did the verdict with a 50 basis points hike and not any hawkish language, market surged higher. Look at this surge. It's a great surge. Similar trend in Nasdaq as well as Russell 2000. In the futures market, look, we are down slightly here. Dow Jones Industrial Average future down 51 points. S&P 500 down 8 points here. Nasdaq down 20, as well as Russell 2000 down 3.30. Typically, this happens after a nice huge rally. Market tries to breathe and settle down. That's what's going on here. All right, now let's jump in here and look at a quick market update. From a market update perspective, Fed raises the rate by half percentage point, biggest hike in 2 decades to fight inflation. Central bank also outlined a program in which it will buy bonds in a tune of $95 billion a month. And this is the largest since 2000. And also Fed chairman, he said maybe 0.75% hike. It will basically hurt Americans. That's why he did not do it. I think that's a good language here. Fed is not hawkish. Looks like Fed chairman is sensitive to Americans feeling pain. That's why he did not take extreme measure to increase by 75 points. That's a good one here. And we got few stocks which did not do well. We got Johnson Controls. It came tumbling down today because of the strong. It has a strong demand, but supply chain trouble, as you can see here. And we got Revolve here. Also, stock came tumbling down here, decelerating growth. Ford stock seesawed. I think at this point Ford could be a good buy here. And we got Fastly. Fastly also came down here, wider than expected loss and CEO search announcement. So with that, let's jump in and look at the major indices. From a major indices perspective, look, it's a broad-based rally. We got all the major indices, including oil and gold, all went higher. That's a good sign here. So as you look through the 52-week range in these major indices, look, many of the major indices are near 52-week low, as you can see here. But I think we got crude oil, which is around the higher side of the house. But everything else is pretty much pulled back here. So at this time, you should really look at some great stocks which are profitable and down, trying to make its move higher. From a sector perspective, look, in today, one day, all the sectors had nice rally here. It's a broad-based rally. Even up here, with the exception of energy, many of the sectors are still at the lows here. As you can see here, technology can still buy, make some good money as it bounces back. Same story with the communication services. Think about Facebook and Pinterest and so on and so forth. Basic materials is up nicely. So I would look at bounce back candidates like technology, like communication services, consumer cyclicals, and so on and so forth. Look, they're all close to the 52-week low, and they can give you a nice uptick as we go forward. So with that, let's jump in here and look at most active stocks. From a most active stock perspective, look, we got AMD. AMD is going higher. It had a nice earnings and good confidence level from Lisa Su. AMD is taking on data center in a big fashion. So stock came up. Stock is up nicely, as you can see here. It's going to slowly cross $100 and jump higher. And we got Apple. Apple is a great stock here. Look, it's also big market cap company. It still went up higher. Nvidia, I think this stock is beaten down big time. It's a good one to buy. If this goes down, buy some Nvidia, you will do very well. And we've got a few more here. Even Ford is a good one to buy up here, and even Bank of America, ExxonMobil, all good to buy here. They're all beaten down here, trying to make us move higher. On the big winner perspective, look, we got few big winners here. PayCycle, Match Group here, which came tumbling down yesterday. You could buy this one also. Generac is also oversold. You could buy some Generac here, and so on and so forth. All good ones. Even though they are big winners today, they are still worth buying here. If you see them get hit, buy some of these names here. You will do well. And we got here big losers. Look, typically I look at this segment very carefully. Look, Akamai, one of my favorite stock. It's a trading stock for me. It came tumbling down. As it settles down, I'll be buying some Akamai. It'll give a nice bounce back as we go forward. And we got JCI, Johnson Controls, as well as Idex Labs and ICE. My favorites. You could buy these names here and take advantage of this whole sell-off here. And we got a few more, as you can see here. We got Verisk is also a good analytics company here. You could buy this one also. It also has a nice performance long term. And we got Skyworks. It's a 5G play. You could buy this one also here. Stock came down here. And we got a few more, as you can see here. And we got 52-week low. All these three companies are good ones here. You could buy these names here. Rockwell came tumbling down yesterday. Nice bounce back today. Even up here, all these names, IDXX, JCI, and Rockwell, you could buy them up here. All right, now what we'll do is we'll look at top ETF to watch. From a top ETF perspective, look, it's a broad-based rally. If you look at one-day performance here, most of the major indices did well, with the exception of US dollar. US dollar is slightly weakening, which is good. This will help commodities, and even generally lower US dollar is good for multinational companies who will export into other countries. So with that, is a broad-based rally here. Even up here, keep a watch on the RSI, or relative strength index. Many of these stocks have got lower RSI. Look, we got SPY. Even up here, it's a lower RSI. You could buy these names here. I would wait for a little bit pullback here. It's a nice surge today. So when they pull back a little bit, you could buy these names here. All right, so now let's jump in and look at most profitable beaten down stocks. Look, all these companies have got beaten down. Look at one day here. This is sorted by one day performance. Look, all these names have got beaten down here in one day. And also look at the 1 year growth here. 1 year sales growth is more than 5%. That tells you these companies are growing the top line and they're doing very well, and revenue is growing. At the same time, net margin is also more than 5%. These are profitable companies, not money losers. And I keep a watch on 2 year, 5 year. Many of these companies have done well in 2 year, 5 year, with the exception of few. I think we should focus on the ones which have done well in 2 year and 5 year. And look from a next year EPS growth and next year revenue growth perspective. All these companies have got positive growth for next year. And also look at the overall score here. Higher the better. I like the one with nice and high overall score. So with that, let's also move this little bit to the side so we can look at the ticker here. All right, so let's look at some of these names here. Look, we got Akamai at the top here. Let's move a little more. We got Akamai at the top here. Akamai is one of my favorite trading stock here. Look, Akamai came tumbling down here. So at these levels, you could buy some Akamai. You will do very well. Look, Akamai down 9.7% in one single day. Look at the overall score. Nice and healthy overall score. And net margin is 19%. So this is a good one to buy. You could buy this great stock here. It will do a nice bounce back as you go forward. And you got RRR here, Red Rock. Look, this is also a good profitable company. 19% net margin. Overall score is 72. Pretty healthy here. Performance in 2 year and 5 year is also pretty healthy. You could buy this one also. And we got a few more here. We got Johnson Controls and IDXX. IDXX is one of my favorite stock here. They help pets with their medication, and it's really a pharma company for pets. Look, it's done very well in both 2 year and 5 year. You could buy the stock up here. It's beaten down. Look at the RSI here, 26, completely beaten down here. With the Wall Street is afraid of their margin, lowered margin. That's why it came down here. We got a few more. I also like ICE, Intercontinental. It's also a good one to buy here. Look, performance is okay, but it's a good one to buy here. And we got a few more. I like Verisk also. Verisk, as you can see here, a little bit higher debt. That's why it's a red in the debt to equity here. But looks like overall performance is pretty okay here. 28% in 2 year, 158% in 5 year. And we got a few more here. Boyd is a good one. Boyd Gaming, nice performance in 2 year and 5 year. You could buy this company also. Nice overall score of 78. And we got a few more, as you can see here. Keep a watch on the ones with nice and high overall score here. We got WCN, nice score here. And we got ENVA and TXRH, all of them with nice overall score. You could buy these companies. Look, also net margin perspective, they're also doing very well. Nice net margin. And we got a few more. I love Sony also. Sony is also a good one here. Sorry, Sanofi. Sanofi, SNY. Performance is not great long term here. Overall score is good. You could take a look at this one also. But if you want a higher performance, you could look at other names here. Like RH. RH is beaten down here. Restoration Hardware. You could buy some RH also here. And you got Globe. Globe also looks like very good overall score here. You could buy Globe also here. Nice 5 year performance of 482. And stock is $216, a little bit on the higher side of the house. And we got a few more. Keep a watch on overall score here. And we got both Race or Ferrari and Chipotle Mexican Grill. Both have got nice overall score. You could buy them at these levels here. And also one of my favorite is Keurig, KDP. You could buy this name also here. Profit margin is positive here. Overall score is 75. And all these stocks have got cash more than $100 million and free cash flow also more than $100 million. So these are a good one to buy here. All right. Now let's look at continuation here. From a continuation perspective, look, same story here. Sales growth more than 5%. That's a great one here. And as you look through here, net margin more than 5%. These companies are making money. And look, free cash flow as well as cash more than $100 million. And next year, EPS growth as well as revenue growth is positive. So that's why it's good here. So you could buy these names here as they're down, as you can see here. Look, all these companies are pulled back here up to this point here. And look at the RSI here. Many of these stocks have got lower RSI. I like the RSI lower than say 50. Those are my favorites here. So with that, we got Welltower here. Welltower, for the folks who are dividend investors, they pay very good dividend. You could buy this one also here. You will do very well. A little bit lower score, as you can see here. If you concentrate on the higher score candidates here, you got PSA here. Public storage, nice overall score of 81 here. Also pays some good dividend. You could buy this one also. And we got a few more, as you can see here, with nice and high score. We got SIMO here. SIMO Silicon Motion has got a nice overall score here, 93. But I would not buy it up here because a little bit higher RSI for me. I would focus on lower RSI candidates. Even Gartner gives you very good buying opportunity. Sometimes after the quarterly earnings, they come tumbling down like it's doing right now. You could buy some Gartner here. You will do very well long term. Maybe if you keep it for a quarter or so, you could have a nice bounce back here. And we got a few more, as you can see here. We got Mime. Mime has got overall score of 91. This is also a very good trading stock. You could buy this one also. I also like Zebra. Zebra is a good stock here. They do a lot of connectivity type solutions here. You could buy some Zebra here. And we got one with 100 out of 100 here, FDS. You could buy FDS. Overall score is pretty good, not FDS. Regeneron is one of the great stock here. Stock is down big time, RSI is 39. You could buy some Regeneron with a perfect 100 score here. And you got Glaxo. Glaxo is a little bit lower on the performance. Probably it's good to, if it's a performance perspective, look, it's not done well. I would probably skip this one and go after the better ones here. All right, so let's look at a few more here. It's also again continuation. I would look at a nice overall score here. We got a few right here. Fortinet, one of my favorite. NCT and TNet, all have got nice overall score here. You could go after these names, and they've done pretty well. At least Fortinet has done very well in the 2-year, 5-year, as well as TNet has done very well too. And we got a few more, as you see here. I like the higher score candidates here. And we got, I think, one more. Is it GoDaddy here? Yeah, GoDaddy. Look, it also has a nice score and lower RSI. You could buy some GoDaddy here. And we got a few more with nice scores here. We got TradeWeb as well as Weibo. I like TradeWeb here better. Weibo is a Chinese stock, as many of you know here. And we got a few more with nice overall score. Look, we got, I think it's IART and Darden and TRNO, all nice score here. You could go after these candidates also here. Look, they got lower RSI. And we got a few more, as you can see here. I typically like the higher overall score candidates here. And you could go after those names here. Look, we got Invitation Home here, INVH. Nice score here. You could buy this one also here. RSI is just 36. All right, so with that, what we'll do is we'll look at few charts and go from there. First chart is Akamai Technologies. Look, Akamai came tumbling down here. Now trying to go higher. At these levels, I would be a buyer of Akamai. Oh, stock actually came tumbling down. It's right here. At these levels, it's good to slowly buy some Akamai here. On the balance, this volume is coming down slightly. It will turn back and go higher. Then we got Idex Labs, one of my favorite. Look, stock is came down after the earnings here because of margin worries. I think it's a good one to buy here. This company will do very well long term. And then you got ICE. ICE is a good stock here. All these capital asset type companies are coming down here. It's a great one to buy. This will also give you very good opportunity to bounce as you go forward. Then you got Boyd. Boyd Gaming also, look, it came down here. At these levels you could buy some Boyd Gaming. Look, on the balance volume is stabilizing here. All right, now let's look at a few more here. We got WD. WD, look, stock is kind of trading sideways to down, and look, it's a good one to buy up here. You could buy some WD here. Look nice, overall on the balance volume here. And then we got WCN, one of my favorite waste management companies, along with WM Waste Management itself. Both are good ones here. Look, it's came tumbling down here. You could buy this one, nice on the balance volume still. And then got a few more here. We got Restoration Hardware. Stock is trying to really consolidate it up here at these levels. I think it's good to buy RH slowly and accumulate. And similar story with the KDP here. Look, it's kind of trying to settle down here at these levels. It's a good one to buy. On the balance volume is slightly increasing. That tells you folks are buying this company, taking advantage of this depressed price level and also lower RSI, which is 47. All right, now what we'll do is we'll look at a deep dive on Idex Labs. Look, pet care is a trend. A lot of people love pets. With that, this company Idex Labs develops, manufactures, and distributes the products and services for companion animal and livestock, poultry, and so on and so forth. It's a pet pharma company. It's a good one to buy. Stock came tumbling down because Q1 earnings surpass estimates, but margins are down. That's why stock came tumbling down. At these levels, it's a good one to buy. All right, look, we got Idex Labs here. We got CEO Mr. J. Mazelsky. Overall score is pretty good here, 72%. I think employees are liking this CEO here. And looks like there are a lot of pros here. Internal growth, good benefits, great benefits. I think employees are generally happy. Looks like work is, work can be a little bit brutal in some departments, but it's part of life. I think it's a good one to buy up here. I think management checks out. Jay is doing a good job leading the company. All right, now from a numbers perspective, look, we got here nice EPS growth here. They're growing their earnings, that's good. They're growing the top line sales, that's also good. Shares outstanding is decreasing slightly, that's also good. All the three boxes ticked. Company doing well from a top line growth and a share outstanding perspective. They're not diluting. Operating margin trending higher, net margin also trending higher. Looks like the latest quarter there is some worry about margin coming down, but generally it's going higher. And they're also reducing their debt in the balance sheet. That's also a good one here. From a number perspective, this company checks out. They're doing very well. All right, now let's look at a few more details here. We'll do a quick look at the snapshot here. Look, their debt to equity ratio is 1.50, slightly high. Current ratio is 1.3, which tells you they got enough money to meet short-term obligations. High IV percentile means you could sell some put option way below the current stock price and make some money that way. Analysts say buy. From a technical rating perspective, it's a strong sell. I like the divergence. Look, stock has been taking a beating in 1 day all the way to 1 year. And it's done well in 2 year and 5 year, as you can see here. Even in 10 year, it's done great. And as you see here, it's a positive net margin company. Net margin 23%. And this company also has got a nice working capital, 192 million here. And I think they got nice free cash flow. That's also great here. And stock is down from a technical perspective below its 200-day moving average. And a lot of people are buying put options, hedging the stock in case if it falls down. And with that, from a Morningstar perspective, gets a perfect grade of A in financial health, B in growth and profitability. That's a good one here. And look, Pietro's F score of 7 tells you books are consistently good. That's a very good story here. So with that overall rating is 68, at these levels it's good to buy some Idex Labs and slowly accumulate. Alright, so from an earnings perspective, look, Idex Lab has done very well. They always beat on the earnings per share, and they always generally beat on the revenue, with the exception of right here during I think 2019 June timeframe. They had some negative sales growth here, and same story somewhere in September here. And one more, generally it's a good company here. They string together nice couple quarters. I think stock is down because of margin worries. Alright, so with that, from a technical perspective, look from a chart perspective, stock has done great all the way in 2020 and 2021. 2021, maybe somewhere in July, August time frame, stock came down. At these levels, it's good to accumulate and slowly accumulate this stock here. Alright, now look from a chart, small shorter term chart perspective, stock is it took a beating of the earnings. Look, there's a nice support level right here at 450 or so. That's why, not even 450, around 405 or so. I think it's a good one to buy. Right now chart is ugly. We don't need to look here. Look, red line on top here, blue line down here. Distance is pretty significant. That's the bearish signal here. Look, even up here, smart money is flowing into the stocks slowly. People realize this is a great stock, and big fund managers are buying this stock and positioning themselves with the for a nice bounce as you go forward. Alright, so with that, to conclude here, buy quality stocks with the great sales growth and positive gross margin and positive net margin and cash flow. You will do very well. These companies got enough resources to weather through this any downturn and high inflation. And some of the wealth builder stocks you could buy, you got Idex Labs, Akamai, ICE, BYD, WCN, WD, RH, and KDP, and so on and so forth. So with that, thank you very much. Happy investing and trading. Please subscribe.